Hi guys, welcome to beginners option trading. And my name is Ed. I have a master's in IT, several years of financial analysis experience, and I've been trading options for a few years. My rationale and approach, as mentioned previously, is looking at stocks with the heaviest volume in the past 2 weeks. Let's begin and visit a familiar name, Microsoft. The diagram will point out the last 10 days activity using 30-minute candlesticks. The red ones indicate activity in the negative direction when comparing the closing price of the half hour with the opening price. Notice at the beginning of the 2-week period, stocks started producing results in the positive direction. And toward the end of that first week, it started a more dramatic decline. Just follow along from left to right on that chart, and you'll see that after the end of the first week of some choppy trend trading, which is to say it seemed to hit the highs and lows of a channel, meaning it didn't really go too far, too high or too low. It appears that the buying and selling pressure momentum changed to the sellers. In the next slide, let's look at some of the individual stats. Let's look at the stats specifically. I'm highlighting a high during the last 2 weeks and a low. The high was 190 or so, and the low was 180. What we're doing is um, comparing the price activity to what amounts to momentum. Generally speaking, momentum is defined as acceleration of activity in one direction over the other. And one of the key takeaways from this chart is not only that there is some negative pressure, but that the closing price of this 2-week period, when compared to the low and the high of the period, which is indicated on this chart, clearly shows that the closing price is closer to the low of the period of 181. I'll simply describe this chart as a momentum indicator plus a trend analyzer. It's certainly telling us that we've seen modest growth at the beginning, more aggressive decline toward the middle, and a little bit of evening out toward the past couple of days. Does this continue in a negative direction? What amounts to a staircase? In other words, the first week was a plateau, followed by a decrease, followed by a plateau. Are we going to see a decrease or an increase? That's what we're going to take a look at as we review charts this week. I'd say with Microsoft, uh, it's arguably something that is gonna, attempt to go up over time, but whether it can reach the high of the previous 2-week period of 191 anytime soon, it really just looks like a very difficult task. So I'm going to say that at this point we're neutral on this stock, probably betting that it's going to have to it's going to have to do some work to even attempt to reverse. Thank you very much. All right, let's look at our next topic, which is the Ford company. What we're seeing here is a stock that hasn't really shown a momentum in the negative direction, and as opposed to the previous stock, Microsoft. Both traded above 20 million, which is our barometer for analysis today. We're going to look at 8 to 10 stocks traded at a moderately high volume of over 20 million contracts traded per day. That indicates there's interest in it. It's easy to get filled in these stocks. Most stock is modestly priced between $10 and $12 now, but the volume is so high that people have these in various ways or shapes or forms, whether they own it directly, whether their 401k owns it, and whether they're following it. Ford has made a decision, obviously, to keep up with the movement of producing more eco-friendly cars, which is to say it's trying to stay relevant, which it's impossible to say it's not, obviously. And but the fact is, it's something that's plans to sustain, the competition from the electric vehicle market. Anyway, what we're drawing here are trend lines attempting to show you, look, for the first for the first full half of this 2-week period, the stock has indicated that it's trying to move higher than where it opened, closer to 1175, we'll say. Um, so again, in terms of what is the trend? Right now, the trend appears to be lacking certainty, if not lowering momentum in the up direction. It had that upside in the first week. The second week, it appears to have modestly declined. Um, so what we're looking at is the fact that this stock appears more stable than the Microsoft, which tends to look like it's kind of declining. So again, like we did with Microsoft, we're going to look at the statistics. But just off the top of your head, you should be able to see that we're going to look at momentum on whether the ending price of the 2-week period is closer to the bottom or the top of the charts. Stats for Ford showed the stock has ranged between a high of 1298, roughly in the middle of the period, to 1137, more toward the beginning of the period. The closing price during this period is right around 1230. Things to learn as a beginning trader are candlestick and candlestick patterns, what generally candlesticks can or should mean. On the last trading day of this 2-week period, we will pay attention to the shape and size of that candlestick. The height of that candlestick is very low. It's virtually flat. Naturally, that indicates there was no price movement during that half an hour period. Technical analysts describe this type of candle as a doji candle, which is a candle that doesn't seem to show momentum one way or the other. Upon further analysis, one might say that the candlestick wick, or the area above or below the candlestick itself, shows uh, basically either that it failed it failed to close near the bottom of the wick. In this case, the wick was pretty big, below 1230, but it failed to close below that, which suggests that there are buyers interested right there at that price. However, if you look 3 days prior to that, or 4 candles before that, you're going to see another indecisive doji where there was rejection of the price during that day immediately below. So for the next half an hour or an hour after that doji of 3 or 4 days ago, or 3 or 4 periods ago, sorry, the price did try to go up. In trend analysis, we do want to identify what these individual candles mean. So take some time, look at the various candlesticks on this chart in your free time and see if you agree that these doji indecision sometimes signal a reversal. And if they do, understand that it's an opportunity to maybe think about where is the right place to open a trade. Is it, you know, at the beginning or the end of a trend? Definitely not at the end. You don't want to be selling or buying puts at the end of a downtrend where the stock is now going to reverse. I hope you enjoyed this brief analysis on doji candles, and talk about trends generally as we continue down the path of analyzing these stocks. First, let's state the obvious. This is another highly traded stock that is showing a trend. The trend from left to right is gradual, if not definitive, increase. The hash marks indicate a progression wherein the stock, after reaching a low of the period up through the first 5 days of trading, that's February 5th, 6th, 7th, 8th, and 9th. The low was on the 7th. The next period of growth and contraction resulted in a higher low, meaning there was some growth after hitting a price of 32.80. It progressed to 33.30 or so, went back down to 32.82. These little shifts in price reflect a little bit of momentum, but more importantly, a trend in the positive direction, eclipsed by a move on February 12th, midday at about 33.80. So the stock moved from 32.80 to 33.80 during the first couple of weeks, and it's remained closer to the top of that 33.80 since. It did a precipitous drop due to news about inflation, and then seemed to recover instantaneously. It continues to exhibit positive direction, and let's look at the stats next. Bank of America. If you'll recall, we're looking at weather momentum, which is a comparison of the closing price to the high or low of the period. In this case, a 2-week period starting February 5th. It's evident. Yes, this stock is closed at about 34.09 last Friday. We see that it's a doji candle of indecision, which is to say sellers were rejected below the 34.09 half an hour period very abruptly. There's buyers that want that stock to stay up. Moreover, stock high of the period was 34.12. This is closed 3 cents below that. The stock is knocking on the door, and the low of the period 32.35 hasn't been within range for some time. I would say in this case, of the 3 stocks we've looked at so far, which include Microsoft and the Ford company, Microsoft was leaning negatively, Ford was more neutral, Bank of America, its own sector, seems to be moving in the positive direction. Let's move on to the next stock. This next slide shows an exchange-traded fund. An exchange-traded fund has a price which isn't exactly affiliated with one individual stock, but it's affiliated more or less with some market value of some blend of stocks. The price here we're looking at in the 200s reflects a portfolio of stocks that share characteristics of the Russell brand, which is small caps. Small caps, as I understand it, are stocks that are not blue chip, not super huge, trading in the hundreds of dollars, rather stocks trading under $100, probably closer to 20, $30. So this fund is trading considerably higher than the price of your typical small cap. But let's take a look at it. It seems to be the healthiest of charts that I've seen, notwithstanding the activity at the beginning of last week there, where there's a bit of a gap when the stock was at its peak. After 6 days of trading, dropped, but then it recovered back even beyond where it was trading at the high of the period. Again, there's nothing really different about this stock than the Bank of America stock, which we just saw, which is it's progressively increasing. It looks to be super healthy, positive. Well, how shall I say? In comparison to a modest declining stock, this is a healthier stock. Let's look at the stats in the next slide. These little hash marks indicate more or less where the lows of the day were there in the first week, and how, needless to say, they were rising. And then in the second half of the period, I was highlighting and hashing the highs of the days, and they are increasing. The price seems to be in the last week holding between that 202, 204 price area. I'm not sure that there's anything other than a 202 support line. What I'm going to do is I'm going to overlay another chart at the end of the presentation to show you, is there something we're missing? And so I'm going to draw what amounts to lines that correspond to a moving average, a short-term, medium-term, and long-term. And let's see if there is some kind of correlation between this price and around the 202 mark, which seems to be showing support. Not once, not twice, not 3 times, closer to 4 or 5 times. And whether that indicates that's a solid floor and or not. Okay, let's look at the stats. Again, I've drawn hash marks on the Russell ETF to show that there was a progression in the lows of a few periods called candlesticks, and then highs as well, trending in the opposite direction. You're a new trader, you're probably not really making too many conclusions based on the charts. But let's look at last week and notice what amounts to unusual activity. When you see a gap between candlesticks, it indicates something has happened in the overnight session. News, stock buyback, bad news, whatever. Last week we experienced news about increasing inflation, which prompted fears about what the Federal Reserve would do to curb that, which is generally speaking um, attempts to, react to inflation, which is effectively monetary tightening, I believe. So that's what seems to have happened. But unlike Microsoft and unlike the Ford Motor Company, stocks like the little ones in the Russell ETF and the one we just saw, Bank of America, are trending up. Now, the high of the period, this 2-week period, was 204 or so. The low was 190. The trend clearly goes from left to right positively, and the momentum seems to be fairly high since the closing price is closer to the high end, which happened only a day or so ago. We're almost done analyzing these individual stocks because we've covered quite a few and you're starting to learn. Yeah, so this is a Thinkorswim chart where I'm looking at the Russell 2000. When we went through the slides at the beginning, you're going various slides and looking at, okay, there's points of like there's either troughs or peaks. Trough means that the stock bounces off this price and it won't get below it. Let's look at the stock towards the right side of the chart. You'll notice that there's a few red candles and there's a line that's indicating basically where the stock on a not just a daily basis, because this is the 1 hour time frame. At the end of every hour, the stock is stuck to that line. It's the 5-day moving average. Look over to the left. When the stock is above the 5-day moving average, the stock is going up. It's going up day after day after day. What happens? The stock trades under the 5-day moving average. It's going down. So what's a trade signal? As soon as that stock closes above the 5-day moving average, this stuff starts going up. It's simple as that with the IWM. Simple as that. Let's look at another highly traded stock called Pfizer. Pfizer is one of the largest drug manufacturers. And it's just, hitting it out of the ballpark in some respects in the news with various drugs. But the price is really modest, actually. 28 is closer to a small cap, if you ask me. The price activity, if you'll notice, is a little less abrupt than it was in these other stocks during the bad days last week. I don't see a lot of gaps. I see price support right around between 27.40 and 27.62. So this stock is like a neutral to me. It looks like it's not going anywhere fast. It's definitely been higher than it was the beginning of the 2-week period. I'm not even going to draw on this one because there's no real need to. This is a really gradually increasing stock. If I was thinking about investing in the long run, this is a stock that I would never fail to include. I'd always buy this. This is a stock you want in your portfolio. That's my understanding. Let's look at the stats on Pfizer, and then let's come to a more progressive understanding of candlesticks and periods, because this gives us an opportunity to look at uh, two pictures within one. I'm going to point out the 12th of February as the start of the second week period, and we'll compare how the stock did in this past week with how it did last week. And right off the bat, you'll notice that it was more stable this week. In the first week, it made a gradual, if not pronounced, increase because of the activity during the 6th. And since the 12th, the stock has remained relatively steady despite a little bit of activity during those inflation days. And again, we're trying to figure out if there is some kind of artificial support where 27.40 seems to be the lowest that stock is going. Let's look at stats. Again, those of you that are more advanced intermediate traders, forgive the pace. The pace is important for everybody. The pace is important so you can pay attention or maybe notice things that you wouldn't notice unless you had two sets of eyes looking at it and extra time to look at it. So, as per usual, we're looking at stock and then the stats. Over the last 2 weeks, I'll publish the exact same presentation in 2 weeks, and we'll see if these stocks remain close to the top of the trade. The stock, Pfizer, pharmaceutical company, relatively low price, should be included in most people's portfolios. The high of the period was around 228 bucks, achieved about this time last week on Monday. However, on Friday of last week, it came close at 27.80 some. So, what can we say? The stock remains toward the high end of these 2 weeks. It achieved the low of 26.52 eons ago, meaning this time 2 weeks ago. What I said toward the end of the last slide is let's look a little bit more differently at this slide and look at it as two periods. Why is that important? Because technical analysts will suggest that there was a low of the last period that was lower than the low of this period. The low of this period on the 14th was a slightly low 27. The period before, the week before, the low of the period was considerably lower, the 26.60 range or so. So it would suggest for technical analysts that there is some progression forward. A healthy bull market would have shown that the high of this past period was higher than the period before us, which is to say, I don't see that very clearly. I see some high price at the beginning of the week on the 12th, but it really wasn't met with much demand, and the stock more or less was inclined to go down more or less because of that news about inflation and so on. As I think aloud here, Pfizer is not a company that it does anything other than health. Health products are always going to be in reasonable demand. The government continues to subsidize health insurance. I think the price is fairly stable for stuff in the healthcare sector. So again, I don't think this is going to be as well as others personally. So that's why I want to talk a little bit about it. The minor concern that I have is again that the stock doesn't clearly show that this period's high was higher than last period's high, and um, well, that's a mild concern to me. Um, this stock isn't destined for a massive move in either direction, and just gives us an opportunity to think and use our brains on what constitutes a healthy market for Pfizer, and I think we're in one. Let's go on to the next one. The S&P 500 is a market which contains about 500 of the world's biggest, smallest, medium, all sorts of stocks. There is an ETF called the SPY, which attempts to encapsulate the movement of all those stocks, which I think is fairly artificial and superficial because I'm not confident there's a price range or correlation, to each and every stock very distinctly. Many people will say the S&P is driven by 5 or 6 stocks. I'll look at it in passing. We'll notice that this has more of a problem than the stabler stocks that I saw, Pfizer and I think it was Bank of America, with less of a gap on those inflation days. Gaps indicate really uncertainty. During the first week, there was a gap on the 7th. It was filled on the 13th, which is to say gaps are known to be filled. Another gap on the 14th in the positive direction. That gap's going to get filled down at 404. Are we headed there today or tomorrow? Probably this week we'll know. So I just don't think there's a lot to glean from this stock because of all the gaps. There's how many gaps? One on the 7th, one on the 13th, one on the 14th, one on the 15th. Gap on the 15th at 498 or so is probably going to get filled. There seems to be some artificial resistance there right at the close of the business day because during the past couple of days since the 15th, that stock has rebounded right at that place. You'll see a red candle followed by a positive candle. You might even see a higher high for the past couple of days, but the low remains the same, which is to say, what are we seeing? It could be a reversal. They call it a head and shoulders, perhaps. Let's talk about that next week. I'm sorry, in 2 weeks when we review this again. Maybe I'll do it next week and we'll just, look at it again. Right now, this stock is a little more confusing than, for instance, the Russell or anything else we've seen. Just to show you that although this stock looks like the S&P 500 is trending, it's too hard to say because of all these gaps that suggest there's a lot of volatility. And before there's a trend, before this thing moves up, it's going to take a little bit of work. Okay, I'm not even going to talk about the highs and lows. You can figure that out yourself right there. Okay, ETFs, as we know, are exchange traded funds that basically act like a stock with one price, but they're actually representative of the performance relatively to stocks that it attempts to measure or contain within its portfolio, some fraction of shares of stocks. If it's the S&P 500, the SPY ETF will contain fractional shares of various, stocks in there. We looked at the Russell ETF. The Russell ETF tracks roughly the performance of smaller stocks. And this is the third ETF I'm looking at with you guys, the Qs. The Qs, they're commonly traded. Professional traders sometimes will only trade this stock. What is this chart showing us? Gaps. It's really showing me a gap on the 7th, on the 9th, filled on the 13th, gap on the 14th. Again, not unlike the previous ETF, there is some contraction happening and indecision. I don't like the preponderance of red candles in the last week. It just seems any attempt to go up is followed by a precipitous drop. Does this indicate the stock is clearly heading in a negative direction? No, but it has a propensity to go negative. So is this something that I want to be shorting? Probably more than I would be otherwise. This stock ETF probably is closer to the highs of the last year than the lows. Um, and again, at the end of the presentation, I'm going to go show you how these charts individually, all five or so, compared to trend lines that are graphically built using a tool on Thinkorswim called the study. The study will show various trend lines, and we'll see if these support areas are corresponding to any, and that'll tell us, hey, clearly the trend lines are positions of interest to buyers and sellers. Doji candles are not evident at the end of the QQQ here. Um, the highs and the lows, the stock is trading right about where it started about 2 weeks ago. So that to me indicates that this whole period has been an indecisive section with perhaps no clear distinction of where the activity has been. Has it been mostly above the starting price or mostly below? Mostly above would indicate it's rejecting these higher prices, right? Or a drastic move above indicates rejection. Less drastic move towards the down suggests the stock is real comfortable at this price. That's not something I'm interested in. I'm not interested in this stock, these stocks. All right, American Airlines is the next stock on my list. Let's take a pause and regroup. This is a class for beginners to advanced beginners in analyzing and understanding technical analysis. Technical analysis is the standard go-to rubric methodology. I'm a trained financial analyst, data visualization, data analyst, Power BI, SQL user. I've worked at Fidelity. I've worked at Lockheed Martin. I've worked at one of the big four accounting firms, mostly on cost financial analysis. But I've just had to sit in front of statistics and charts to estimate trends and dependencies and statistics. I have a master's in IT and public administration. Name's Ed. I listen to alternative rock, such as music that you hear in the background by a local Pennsylvania band. I was in Maryland growing up and in grad school. Now I'm in New England. It's called The Ocean Blue. Hope you like it. Takes the edge off, doesn't it? All right, so American Airlines started the period 2 weeks ago. Price X below 1440 or so, closing closer to the upper end of the chart where the highs are. Look at that. Look at that chart. It seems to be hitting $15. 1, 2, 3, 4, 5, 6, 7. You know, Having seven separate hourly increments over the past 2 weeks is for me a lot of activity. Certainly between 14.90 and 15, that stock has stayed up there. And so again, looking at two things. Is there a trend? No. The stock right now is at 1460. It opened closer to 1440. A trend would suggest maybe that there's been a considerable increase or momentum. Is there momentum? I don't think so. When you see that much chop staying around one price zone, it's not momentum, is it? The stock is closed. Look at that, almost 50% of the high and what amounts to 150% of the low, meaning right there in the middle between the high and low. Okay, well, we're capturing our stocks that had high volume, over 20 million the past couple of weeks. We're closing the loop on look at them, and look at this. We've actually covered a lot of sectors, from the car to the bank, healthcare, airlines, some IT, some ETFs. What's left? What's left? Let's see what's left. I mean, I do have hundreds of stocks that I analyze, and I'm just going through them in groups and chunks. About 50% of the way done. I will tell you, it's hard work, but we're going to find something. I'm telling you, we're going to find something. Told you we'd find something. I know because I did a preview of this on my own over the weekend, looking at my high volume stocks, and I saw there's a couple that we want to go over. But let's be thorough. All right, we got a stock here called Roku. Roku, for those of you that are uninitiated, is primarily a streaming type of appliance. You can buy the hardware, which is a Roku TV, sign into your internet without getting cable, and you get a lot of channels, entertainment channels. I've been using it for sports, for TD Ameritrade, Charles Schwab, cheap, easy TV. I own at least one Roku TV, and probably Roku subscription in some way, shape, or form. Irrespective of that cutting the cord mentality, the stock is fairly popular. It's trading at 95 bucks. That's higher than the Russell. If you remember, this is among the more expensive stocks. So it's problematic because the trend was fairly consistently high going into the end of last week. Now, in the past week, it started on a gap down, doesn't it? 12, 13, the day of inflation. And then at the end of last week, probably unrelated to anything other than some random news article, which we'll look into next week. The stock is gapped. What did we say about gaps? They cause problems. So I'm not going to look too much at it other than tell you that experienced traders understand that perhaps this stock has been unfairly valued in a gap, meaning it's going to get filled. This stock is going to go back to 95 one day. It's just, we're pretty sure. Is it going to go back to 95 in the next month or not? It's tricky, isn't it? So if you take out the day of trades on the 16th, this stock was pretty steady, Eddie. It was maybe had a little bit of a gap. But the start and end points would have been right around the 90, 95. So how it dropped down to the 75 means we have to do some research. But if I'm a gambling man, which is absolutely part of who I am, I'm going to look at how to profit from Roku's return to 95 in the next couple of months. And this is about an introduction to options trading. So I'm going to examine at the end of this video prospective trade. We're going to do paper trade on it. We're going to go over it step by step. Don't worry, it's close to the end of the video. We're going to do that in the next 5 or 10 minutes. And then you're off to do your own research. So we'll see you back here in a couple weeks. Okay, guys. Again, we were looking at a comparison of charts, places where there seemed to be some kind of underlying, opportunity to identify. This is a place of support. Stock won't go below it. The stock won't go above it. We looked at a few examples. Let's look at Roku. Roku was a chart, obviously, where I noticed like it's either staying above that or staying below it. On the left-hand side of the chart, again, we're looking at the bottom line is the 3-day moving average. The top one is the long-term moving average. The middle one is the medium term. So in a bear market, it's obvious that the inverse of what's happening in a bull market is happening. So in a bear market, the short-term moving average is below the medium-term moving average, which is below the long-term moving average, which is exactly what's happening on the left side of the chart. From top to bottom, you've got the dotted lines which indicate that's a bearish signal. Things are going down. That's just how the average trailing stop works in Thinkorswim. It's a detail for more advanced beginner traders, which we'll go over later. So where it says RO down that particular grayish area, the stock is clearly down. Then what happens? For some God-forsaken reason, the stock decided to touch the middle of the moving average. It just touched it. It touched that medium range moving average. As soon as it touches that, the short-term moving average is starting to go up. When it goes up, okay, and that stock touches it again, that's a 2 touch on that medium range moving average, you got everybody buying. For whatever reason, the stock shoots up with that long dark bar there. And immediately these little dots underneath it are going buy, buy, buy. Let's look at what's going on in the volume indicators. Like the volume indicators kind of went nuts just before that stock started, how shall I say, recovering to the medium day moving average. So high volume activity seems to indicate something. Okay, check that box off. Okay, let's look at the polarized fractal efficiency section. Things are in the beat up range, down there by the bottom. Things are down there by the bottom, and eventually they curve up. they start curving up just as that medium range moving averages touch choice, just before that three dots starts indicating a buy signal. Okay, that's what's happened. Again, we're on an hourly chart, and all I can tell you is if you buy there, what happens? As soon as that dot says buy, you buy there, that stock went on a ride. It really did. So I'm switching over to the Thinkorswim view now, okay, and I'm telling you the chart went up as high as 96.71 from 87, a full 10 bucks. I mean, that's over 10% move, man. That's huge. Okay, after it got to that 97, okay, right there, 97 or so, 97.86, okay. After it got to the 97.86, right, where was I? 97.86. After it gets to that, yeah, 97.86, we said it's over here. 97.86. That's on Monday. Okay, that was a week ago today. Monday. Okay, 97.86. Pretty much, it closed well above the 3-day moving average, well above the long-term moving average, well above the medium-term moving average. Once it does that, in a huge way like that, kind of like the opposite happened below when we saw a lot of volume. Okay, we see a lot of volume there too. It started to settle down. And just as soon as the short-term moving average crosses the intermediate moving average, it started selling. And it sold towards the end of the week. As we know, there was issues with the inflation. It went all the way back down, didn't it? And this is what we've noticed in a lot of charts. But by zooming in on one particular stock with no apparent correlation to oil, no apparent correlation to heating, or entertainment, no apparent correlation to healthcare, no apparent correlation to oil, no apparent correlation to small caps, no apparent correlation to oil, energy, what else? A little bit of IT. Look, they're all basically doing a very interesting thing. They're all simultaneously acting in unison because of some strange news. But who's the healthy one? Well, it remains to be seen, but at least we know before these unhealthy incidents, we are actually spotting patterns of behaviors in stock. And let's do the inverse. As soon as it hit the high, okay, it started paralleling out. And then I got some sell signals and sell. All right. Is Roku showing us any indication of buys? Well, let's look at that on the next chart. All right, if you look toward the left of the slide here. All right, let's look toward the left of the slide. Just to be clear, left of the slide. Over here. Right there. Left of the slide. We're seeing on the previous slide, that's where the stock price peaked, about $10 above where is there. And we see these little dotted lines beneath the price. That means it's bought. Now it's switching over to above. Okay, it started to switch over. Okay, switches over, right? Switches over right around there. Those little dots are above the price. That's selling. How far does it go? From that line to over here. How far is that? The price range there. I'll look on my Thinkorswim platform to tell you the honesty. Or 71-ish or so. What does that say? 71-ish. It was from 71-ish to it was at was it? God damn, that was like 95-ish to 71-ish. Okay, so selling is not a joke. Okay, as soon as it starts selling, like you pretty much got to just hang on. But obviously that week was all screwy because of the inflation numbers that were horrible. But a lot of stocks seem to deteriorate really seriously at the end of the day. Like Roku's the first one that started dropping on Thursday in advance of the huge drops that we saw some other stocks do. But you gotta pay attention because if we look at the stock, with its ups and downs, the news coming and going. Like Roku is more than likely, Roku is more than likely going to get another buy signal. With these great variances in prices, you got to pay attention. So let's go over some prospective trades based on what I'm seeing here. Based on what we see, let's go over some prospective trades. All right, so now instead of the chart view for Roku, I'm on the trade view. All right. We are trading right near that that area where the blue becomes black on the left, where the blue becomes black. Okay, this is where we're looking at. This is where the price is today, right there. Okay. All right, that's the cost. That's the cost of an option. If you go over to the middle of the page there, it tells you the date, right? Like this is the date. Options expiring 23rd of February 2024. The strike price, 71, 72, 73. Those are the strike prices. The stock was trading in the 90s. It's trading in the 70s. Let's pretend for whatever reason we think the stock is going to go all the way up there to 90. Like this view only lets me see down to 82. Okay, like right here. What's that? 82. All right, what is that going to cost us? Somewhere between, let's see, 31 and 34. 31 and 34 bucks. Okay, that's fairly inexpensive, isn't it? 31 bucks. If the stock goes from 71 to 83 by Friday, that $31 stock, that $31 price is probably going to double. So you doubled your money. 10 of those, 300, 600. Let's say we'll look back on this on Friday and see where it closes, okay? That's the idea behind options. We just don't know how high that's going to go. And for now, off the top of our heads, there is a metric, okay, that we want to look at. It's called the expected move. The expected move is calculated by taking the cost of this item here, which is the call, and this item here, which is the put. Okay, the call and the put. Okay, the call is trading about $3. The put is trading around $2. So the expected move is $5. So we're trading at 71-ish. It could go down to 66. It could go up to 76. Anything outside that range is considered a risk for the expiration date of February 23rd, which is to say nobody expects the stock to make a dramatic move to where it previously was at the 90s in a short amount of time. What if the volatility reduces immeasurably and the stocks continue to go up for whatever reason because the news says, look, we have no chance of seeing a recession. Things are just improving. Whatever news comes out, some miraculous thing like world peace happens. Yeah, God forbid the world does that. But world peace happens, the stock shoots up. You're making a lot of the stock is going to go above it. So if I'm predicting it, look, if I'm bullish on the stock, I'm definitely going above and beyond what that expected move is. So if it's at 71, I'm looking at 77. Okay, that is an expensive call. It's 98 bucks. I'll call it $100 if it moves 500. I'm going to make $400 if I'm right. Look, I'm pretty sure it's going to do that. I don't think it's going to go down. Let's say it does go down. I mean, entertainment during COVID, what stocks are doing good? Exercise and entertainment. I just don't buy that every stock is going to hit a bear market. I don't buy it. So let's do a sim trade here. Like I said, I was looking at $34. I like $40 as a limit on any option. I just like that price. Okay, so I'm buying a call at the 82 strike price of $32. We'll do it in a paper trade, $32. Okay, $32. 82 strike price. Okay, 82 strike price. Let's just circle it right around here so when we come back and look at it, we remember. 82 stock price. Expected move is 5. We only think it's going to about 76. We're saying let's go nuts. Let's see what happens. That option is going to go up if the stock goes only up by $5 anyway. Okay, that's what we're learning in this thing. But why are we doing that? Because we believe, based on the charts, that that stock can move, and that right now it's not in a buy signal. But we don't think it's we think it's bottoming. We just see it's just doji after doji, flat, flat, flat. Here we go. ExxonMobil, yet another market participator, a separate indicator, a separate market, the oil market. Oil for me has been an alluring place to trade over the years, mainly because if you follow any of the rags that cover the stock market, entire sections are devoted to OPEC, oil, and meetings, which involve, hey, let's fix the price at X to, shorten supply and cause prices to go up because we just need to have some stability and predictability of our prices and income. Is ExxonMobil a buy? All right, let's look at it from two perspectives. The 2-week perspective indicates that momentum isn't there per se. Like, we seem to get stuck at 104.50. We can't get over 104.50. In fact, since its last reached 104.50, maybe 2 o'clock in the afternoon, Friday, the stock decided to go down, if not very violently down, from 104.50 down close to 103.50. Violently, not violently, but quickly. Where do you expect to see it catch some support? Is there support? 103.50? A little bit in the last day. 103.50. The end of the day on Thursday. I'm looking at support probably more clearly right around 103.25. Look at there at the 13th. That was a lower high from the 9th, more or less similar to the price on the 8th. But that downward, if you were to draw a trend line from the 8th to the 13th, you'd see that the highs are kind of going lower. Look at the 14th, the high is close to 102.50. Now on the support side, support is clearly shown under there, under the 10, right at about 101, maybe 150 cents. There's support there. Let's see if I can draw a line here real quickly. I was talking about some support around here. Let's see if I can draw the line very clearly or not. Let's see if you guys can see this. Okay, that's where I was saying 150 support. Look at the distance we got to go to that support line. It's a long way. I was saying perhaps we'll find some support around here. Look at the 13th is where I drew it, then look back on the 8th. There seems to be some activity where it was support and resistance and support. So analysts will say there's a double top going on there at 104.50 during this period. So look, the stock tried to go up to 104.50 in the first week, retraced down to the beginning of the period, its price, and then it went right, shot back up. That's a tight price range, 104.50 at the end of the period, and 100 and 100 a buck, $100.50, $4 for a $100 price stock during volatility. A $4 price, 4% price move in ExxonMobil. You missed it. Now's not the time to be going into ExxonMobil. You missed the 4% rise. If you had been in the stock at the beginning of the period, you would had the chance to sell 104.50, 4% gain. Whether it's going to go up another 4% to 108 remains to be seen. Is it going to happen in the next week? If it continues at the pace it was last week, it'll get there. But what's to say it will? What's the indication? Well, first we'll have to close above 104. When we close above 104, we can say, okay, using that 104 area support, and look, this is not a trading opportunity. It's just like this is a healthy stock. It's $100. It looks like it's trying to stay above $100. It looks like it has resistance at 104. It's probably not going to go below 100 bucks. Is this a stock you want to own? Yes. Stock you want to own. Do you want to trade it today? Trade it tomorrow. Let's wait a while on that one. In terms of if we had unlimited money, unlimited time, unlimited analysis. Entertainment. We talked about Roku before. It seemed to be kind of bottoming out for no apparent reason on the 16th. Look, communications companies, Comcast, cable, there's an infrastructure there that's only going to get cheaper. I look at this like an oil stock. Look, man, those companies are not going to let you go away. You can say that you're going to go stream X, Y, Z. That's fine, but that's in addition to cable. Don't let people fool you. No one's cutting the cord. Don't let people fool you. Think about the security risks about relying on streaming every day. Like my router goes down, I can't watch the Super Bowl. I mean, you got to have a backup. People, look, it's a utility. It's like oil. Look, this isn't gonna go away. What's it doing? You tell me. It started 45, is now closer to 41, 50. Is it going down in response to inflation fears? Look, if inflation continues to go up, there's a possibility some people get evicted. There's a possibility, boom, you're done. Comcast had to spend more to collect on money. It's a typical thing. It's basically an extension of government. It's not going away. Do I want to own it? Hell yeah. So what have we said I want to own? What have we said I want to own? Pfizer? Hell yeah. What else do I want to own? This. Maybe ExxonMobil. Maybe Ford. This is what I want to own. It's not going away, people. Um, is it in a downtrend? I mean, it looks like it's been between 43 bucks and where it is now for the better part of a week. That's not quite a downtrend. In fact, it's been trying to go up. People are going to look to buy it at $43. That's just how the market works. If it closes above 43, people are going to buy it. It's going to go back to 45. Bottom line. I don't have anything to say about it. The stock is interesting. The beginning of this period it was, 13ish. Stayed that way. Dropped, gapped on the 13th. 13th was what, last Tuesday? The 14th Wednesday when it shot up. Shot up on Thursday. It started selling off on Friday. Okay. What's happening there? Is that an area of support? Okay. Where's the clear area of support? Is down there at 13. There's a gap. The gap's going to get filled. But why is this stock not positively correlated with inflation? In other words, inflation goes up, most stocks go down. This is inversely correlated. Why? Think about it. Your car gets repossessed. You want to go to work, you take a Lyft. You want to skip a car payment, you take a Lyft. In other words, you want to skip or forego buying a new car. Cars in the shop, go Lyft. Kids these days, they don't want to buy cars, they don't want to buy houses. They want to live at home and party. They want to take Lyft. Eventually, they want to buy a car. Is now the right time to be buying anything with interest rates high? No, the word on the street is don't buy anything. Anything. You want to pay $600 a month to get into a new car? To get into a new used car? I think that's what my wife tried to do to get a quote on a car. It's like, 2,000 down. She didn't have a lot of cash. 600 a month for a used SUV. Yeah, I mean, you can afford it, but like, would you do that when you can get a Lyft the 3 days a week she works? Married life. That's a topic for another day. No, it's all good. It's all good. I'm pausing here specifically because I didn't think about it till today. Is Lyft a good investment? Do I have to own it? I would say yes. I would say yes. I have to own it. I have to own entertainment. I have to own rides. People go places and they don't think about it. So what do I want to own? Pfizer. What do I want to own? Comcast. What do I want to own? Lyft. What do the charts tell me? Do I want to buy toward the high or towards the low? I want to buy when the stock is, going to go up, which means it's going to go up during a trend. So do I want to go buy it on a downtrend? No. Is Lyft on a downtrend? Not really. Of all the stocks we talked about that are an uptrend, I mean, this one's in an uptrend. It's an uptrend. We'll review that again. Trends. We're looking at a stock Lyft that is apparently doing a pattern matching to what Roku had done. Okay, we've just decided Roku, which decided to crash at the end of last week, has the potential to go back up in the direction of its $10 gain. This stock, on the other hand, is not crashed. Okay, but what we're looking at is the potential that it's going to do what fucking Roku did last week. What if this one decides to? What if a whole bunch of stocks decide, which is to say, let's just talk about Lyft. What if Lyft decides to do what Roku did on Friday, which is go back down toward the mean or like the lower end of the price movement, the mean? Sometimes I guess they call that a Fibonacci retracement of 50%. Doesn't it just fucking make more sense to call it the mean? Excuse my French. Did I curse? Oh man. Okay. Anger management. One, two, three. Okay, count to three. Look, this stock, why we're looking at it is because if it does go down, we got two trades here going, one in the positive, one in the negative. I mean, well, one of them's got to be right, correct? Okay, so the stock started to make its move up from 12 bucks all the way up to 19 bucks. That's 12 to 19 bucks. What is that? 12. $7 move from 12 is a little over 50%. That's 50% is percentage wise dramatic compared to Roku, which went up 10%. Man, that's why we're paying attention. Just paying attention to the big stocks, the ones that just paying attention to the high volume stocks. It just takes an hour to look at those 10, 20 stocks that did a lot because they're the ones doing stuff. They're attracting attention. So everybody else is going to do what I did because that's what they get paid to do, but they're slow. It's going to take them a week to come to this analysis. Then they're going to pass it on to the banks. A week later, you're going to see more activity in these stocks, which may push them. Look, we're there at the beginning. 50% move. That's even a slight retracement toward the $12 from 17. Just a slight retracement. We're going to collect some money. We're going to collect some money, aren't we? Okay, because it's still indicating buy. Those little dots are saying buy, but it's been flat. In fact, the 3-day moving average is crossed below the medium-term moving average, okay? I've been learning from a group called Prosper Trading Academy. That's right, not Prosper Trading. Yep, Prosper Trading Academy. Look them up. Look up Mike Shore, okay? Look up Charlie Moon, okay? Enough said. Scott Bauer, those are the real deal. I'm setting up my charts more or less similar to them. You can get the real deal, or you can just play along at home. All right, so let's do this. Let's take a look at the prices of the options. All right, so we've discovered that there's an expected move. The calculation is the sum of the cost of the call and put. The cost of the call and put at the price that it is now at expiration date. Okay, so we're looking at a put cost of about 50 cents and a call of about 90, $1.40. They're expecting the stock to go either from 17.50 to 19 or from 17.50 to 16. That's where I'm headed, in the negative direction, 16. Okay. Because this thing started at around 12, didn't we say? So let's just, for fun, for a joke, go a little below the expected move to 16. Just pick 14. Oh my God. It's $1. 100 of those. $100 worth of that. Let's see what happens. Okay, I mean, needless to say, that's a sucker. I mean, that's the easiest way to make money on the planet. Because if it goes down even a fraction, you're doubling your money. I mean, it's that's how ignorant some people are to the price activities of that. So, look, we're looking at the cost of all this. Let's for pity's sake, okay? All the puts, all of these. Okay. The 16 is going for $10. The 1550 is for $8. The 15 is $5. It's nonstop fun. Okay, let's check at this on a daily basis, but it is clear that this has some interest. Yeah, it's Monday happy hour time. I'm chilled out. I had a good weekend, saw some soccer, spent some time with friends and family. Now I get to talk about the stock market, and it's President's Day, it's a holiday. I drank twice this weekend. Unbelievable, you know. My coworkers, friends, I saw you drank today. Yes, I did. I don't drink that often. Once a month. Okay, once a week tops. Usually once every couple of weeks. I'm too busy trying to make money, making money, working. So obviously, you caught me on a good day. I did a thorough analysis for you. I even went so far as to cover Riot, the blockchain company. Does this look anything different than an entertainment company to you? No. Do you have to own it? What did I say? Yes, I've seen the Smashing Pumpkins 8 times live. I even met the guy. Got me free seats. It's a post office pavilion there in DC where I'm from. Was in grad school. All right. I'm just going to downtown L'Enfant Plaza to check out some kind of, historical place. I said, is that Billy Corn? Because yes, it is. Oh man, I hire you. Oh my God, you're the best. Oh my God, so who are you taking to concert? I'm like, snap. I didn't have anybody to take with, so he got me a ticket for both nights anyway. It was like the Oceana tour. What an amazing album. What the heck is going on with this chart? So I'm just pulling up stocks on my watch lists, which number in the hundreds that had over 20 million in volume. Seems like the right thing to do for a beginner trader. Yes, do I make money? Of course. I use various techniques like subscribe to a person's watch list, pay a little money for technical analysis, get hints here and there. Usually I do some permutation of what makes sense. I make oil around news seasons. I make earnings bets, make a few gambles on statistical analysis. Like if this stock chart was showing something resembling growth and I thought it was closer to the bottom of the 52-week cycle, I'd say it's got to go up. Goes up, make a little money. Is this close to the 52-week low? Well, if it is, I'm buying it. Enough said. Gaps get filled. I'm interested. I'm interested. That's pretty much the end. Let's see what else we can wrap up. Trend lines and potential trades on 2 or 3 stocks that I'm interested in. We were previously looking at stocks that seem to hold a specific level. Um, and is there a correlation to anything going on with the other views? This is a thinkorswim view, which shows short-term 5-day moving average, a medium-term 20-day moving average, and a 50-day moving average. So at the beginning of this period on the left side, you're going to see 3 lines. You're going to see a dotted line at the top. That's kind of basically special indicator. I don't remember what it's called. We'll go into it in more detail another time, but it's effectively telling me at the beginning it's in the selling mode, then it was in the buying mode when the dots are beneath the stock, when it's above it's sell. Right now we're beneath it. You'll notice that at the beginning of the period there's 3 lines aside from the top line, the dotted line. There's the top line, generally the short-term moving average. The middle line is generally the medium-term 20-day moving average, and the third line is the longer-term 50-day moving average. The 50-day moving average was where we initially saw some support, like 8 or 9 candles there. We're looking at a time frame of hourly, about an hourly time frame it looks like on this chart. I'll double check while I have you on the line. I'm going to flip over to my view over here. And what is it telling me? Let me see, what is it telling me? It's telling me. Yeah, this is telling me this is an hourly chart. And to confirm again, it's telling me that 9:40, 10:40, 11:40. Yep, this is an hourly chart. Sorry for the delay there. Um, on the hourly chart, it was holding support on the left side of this chart on or about the first day of trading, which is to say February 9th. Okay, on February 9th, okay, all day that chart was showing support on that longer daily moving average. Okay, started falling on the next day, the 12th, which is on the Monday. It started following the short-term moving average. Um, Still followed the short-term moving average in the middle of the week, and it was not breaking above the long-term or the medium-term moving average. That indicates this stock is kind of in a downtrend. Until it starts closing above that long-term moving average, we're not really going to see a lot of upward movement. However, the stock seems to show in this chart that the short-term average has crossed the medium-term average. Sometimes that's an indication of some positive movements coming, but I'd wait until it crosses the long-term. Is this a stock of potential buy? It's got to be in my portfolio. It's just relatively inexpensive. A little squiggly, the polarized fractal efficiency line. My understanding is it's kind of a momentum indicator. So if it's a top, it's suggesting that a lot of people have just bought. So if you can catch it at the beginning of the entrance into the top area, it's going to stay there for a while. It's more retrospect. It's more just confirmation that what's happened is it was buying. I don't see a lot of use of that right in this particular short-term segment. The stochastic extreme, we talked about stochastics, it's momentum. Right there between the two major indices, between the two major bars, there's going to be arrows up and down that's telling you, look, it's the right time to buy or sell, evidently. But look, the whole point was to see where is their support. Look, the stock is following the short term. It's staying below the medium. So I'm thinking right now is not the best time, unless you're gambling that it's going to go up, which I'm not averse to doing. But it's not what a very disciplined trader would wait until there's some indication that the stock is going to go in a continuous form up. Again, it's filled the gap. So Friday had a gap, just like those two other stocks, the entertainment, Roku, I think it was Comcast. We were previously discussing going through a couple of charts again and seeing where there was, some kind of explanation for stocks using a price point as support, meaning they would go up, they'd go down, but they wouldn't go below a certain price. And what I've established in this case with Bank of America, as I did previously, there is some correlation here. This is a tight sort of chart because there wasn't that much activity between the 7th, 8th, 9th, 10th, and 12th. That's to say the end of the first week, or the Tuesday, Wednesday, Thursday, or Wednesday, Thursday, Friday, and Monday. That the end of the first week and into the beginning of this past week, the crazy week. But you will see that I said that it seems to be bouncing at a specific point, and all it does is it indicates that there's a short-term trend line. You've heard the expression reversion to the mean. This seems to be an indication of this stock doesn't go very far from the 5-day moving average, and all it's doing is the 5-day moving average seems to bottom, and that's where you're seeing this support. So the 5-day moving average is really a tight time frame. So all it does is verify that evidently if there's support, it's because there's a trend line and it's hard and fast. The stock is not going far from the 5-day moving average. On the left, you can see, you can see that it's hugging it. On the right, you can see the 5-day moving average is all over the place. Probably because it was this past week where the inflation rates came out a little bit higher than expected on Monday, and then the producer price index, the the cost of manufacturers, the cost for a person to make a TV is going up a little bit as opposed to last month. But even there, like it really doesn't matter. Like it's the stock on a daily basis is touching the 5-day moving average pretty much every day, and when it's not, it is leading. It is telling you where the stock is going, where the moving average is going. So, is it in a positive direction now? Yes, it is. Is it averaging? No, I don't see the stock going very high. Look at the 5-day chart. I mean, it's not going anywhere. It's staying still, but it could go up. Does it go up considerably? I don't know. If you're trading like options on intraday, yeah, maybe like a little bit of money, maybe. Um, but again, all I was doing with the Thinkorswim platform was overlaying these moving averages to see if they show me a story. The story is really simple. There's a 5-day moving average. Bank of America's following it.